Hey everyone, I'm here with Zhuoxin Yin from dYdX, which is a standard for decentralized margin trading and derivatives on the Ethereum blockchain. It's a super exciting project. We spoke to Zhuoxin a couple of months ago about dYdX, Polo Capital. We've thought that synergy, low-hanging fruit, derivatives are low-hanging fruit for smart contract technology. And dYdX seems to have come up with an extremely easy way to buy and sell derivatives by tokenizing the short position or the leverage long position in the token itself. So we're super excited to have Zhuoxin here today. A bit of background on their investor base. Polychain and Andreessen Horowitz have invested in their project. These are the two kind of stalwart investors in Silicon Valley. If they're backers of the project, it usually means it's got a very bright future. And even more excitingly, yesterday was the launch of Expo, which is kind of the launch of the protocol itself. So we're speaking to Zhuoxin at a really opportune time. I was wondering if you could just begin perhaps by introducing yourself and the project.
Yeah, for sure. Thanks for having me, James. It's always good to chat to you. I'm Josh, and I sort of work on the non-technical side of dYdX. Our team is 5 people at the moment, based here in San Francisco. As James said, we're working on decentralized margin trading and derivatives built on Ethereum. In terms of a quick kind of overview of my background, I'm also from Australia, which is kind of like why I was interested to talk to these guys in the first place. My background's in kind of, I guess, more traditional finance. I worked in management consulting for a few years and then moved over to San Francisco to work in tech, and ended up falling into the crypto rabbit hole about a year ago, and joined dYdX about 6 months ago. I think it was a really cool project and tackling something that is clearly a use case for today, which I think is really interesting compared to some other things that are kind of like more longer term use cases. Yeah, so super excited to kind of dig a little deeper into the protocol with you guys.
Great, yeah. So when did dYdX start, and kind of what was the impetus? What kind of market did you see that wasn't filled?
Yeah, so dYdX got started by our founder Antonio in sort of like the second half of last year, around sort of like August, September. I think at the time he was playing around with like different things to start in the Ethereum space. And actually the first thing he did was like a search engine for decentralized applications. But at the time, like there weren't really any dApps. So no one.
Radar, is it?
What's that?
Not dApp Radar, is it?
No, it was called Waypoint. But there really weren't too many dApps around. So it was kind of like a strange, almost like too early to be building that.
Yeah.
I think at the time then there was a lot of like kind of people excited about decentralized exchange. I guess like that was one of the more like, compelling or like hot topics in 2017. And I think that opened up a whole world of kind of like decentralized financial type use cases, maybe like lending, like, credit markets, like, you name it, token securitization, all that sort of stuff. And I think that's kind of how we got the idea of building something for margin trading and derivatives, which is obviously a super key pillar in traditional finance, right? Like, I mean, you don't have to explain to anyone how big that market is. So that's kind of how it all got started. And I think, we're really excited to tackle a very, very big market. That's one of the, I think, more interesting things about dYdX.
Yeah. I mean, to kind of explain how big the derivatives market is, it's by far the biggest market in the world.
Yep.
I think I read that it was an approximately 1.2 trillion market globally, and it thus far hasn't really touched crypto. So one of the most interesting things is about the crypto ecosystem is that it seems like what we're really building is a financial ecosystem from the ground up. So we start with money, and from there everything else follows. So there are lending markets, Compound and Dharma are two really awesome projects that you would know about. They're based in SF. and now you guys are kind of leading the way in the derivative side. So I'm interested also. Obviously, the crypto market is highly retail driven at the moment. The inventor of smart contracts back in the 90s, Nick Szabo, once wrote, in a few years, teenagers in Indiana will be swapping over the blockchain derivatives with grandmas in India without asking New York City. So obviously dYdX is the project that might make this happen. Do you see the kind of derivatives and margin trading and leverage long positions, do you think these kind of financial instruments will become more retail based? I mean, currently people do short things, but dYdX is making it so simple that literally anyone could do it. Do you see it kind of just being an everyday activity? Using
it's an interesting question, right? Like, I think we definitely want to make as simple a product as possible in terms of usability. Like, that's definitely one of the key, I guess, like success factors, or like how we measure ourselves. So from like a usability standpoint, like certainly I think anyone could like, you know, physically kind of like interact with the application and the smart contracts through things like Expo, which we've just launched. In terms of like the actual financial side, though, I think they still remain as like complex or sophisticated financial products. And you know, we're certainly not encouraging, you know, anyone to use leverage and trade, right? I think you've got to have a fundamental understanding of the actual product itself, certainly before you kind of like get involved with it. But what I think, you know, what I think it does proliferate or give kind of like availability to is like with any decentralized kind of product, it opens up like the world to like, you know, get access to it, right? Like there's no kind of like account sign up. There's no like identification, you know, like verification on that front. There's no like limit, right? Like I think with a lot of like options trading today, you can't just like buy like, you know, $100 worth of an option. You have to like, there's like usually thresholds at these like clearing houses or brokerage houses. Yeah. And like none of those things exist with like dYdX, right? Like if you wanted to buy like, you know, $10 worth of short Ethereum, or like $1,000 worth, or like 5,000, you can do it. There's no kind of like barrier to entry on that front. But I think on the education side, it still remains, right? I think like you've got to fundamentally understand like, you know, why you're taking leverage and like the risks involved in doing so. Just like kind of like any, you know, more sophisticated financial product. But in terms of accessibility, I think you know, decentralized products definitely enable anyone to access them. It's entirely global, which I think is really cool and like quite powerful. And there's no thresholds, right, to access them.
Yeah, I mean, I think that's I mean, one of the key traits of the decentralized blockchain is it being permissionless. So it kind of opens up these tools. I mean, one of which Bitcoin introduced kind of a hard money, a censorship-resistant hard money that was permissionless. So you didn't have to be in a certain jurisdiction. You didn't have to have a credit rating. You could buy Bitcoin and you could enter that financial ecosystem in a permissionless manner. And I think you guys are doing that for leverage trading. And I kind of see 0x doing that, a similar thing for decentralized exchanges. Yeah, that's super interesting. I'm really interested in understanding your opinion of the future of Ethereum. A good guy who you probably have met, Robert Leshner from Compound. He was recently. They've also recently launched. So it seems, you know, September, October is the month. And he was speaking to Laura Shin, and he said, if I'm probably as close to being an Ethereum maximalist as possible. That's a term, Ethereum maximalism. But what he was talking about is the potential future state where most assets are tokenized, or their form of ownership is tokenized on the Ethereum blockchain. Yep. Obviously, that kind of reality would be incredible for something like dYdX. So you can create a short whatever in the world. Yeah, I'm just interested in understanding, do you think that's possible to do? Do you think that future is like possible on Ethereum? What's your kind of, I mean, yeah, where do you sit in terms of understanding the future of Ethereum?
Yeah, I think it's definitely a tough question to answer. I mean, I'm obviously, very optimistic about it. And I think, one of the things about like the team at dYdX is that we're all pretty long-term focused. Um, and Ethereum is definitely, I think, the best place to be building something like this today. I think we shouldn't underestimate the number of kind of like tools available to the ecosystem. Even like, you know, kind of like seemingly simple things like MetaMask,
Yeah,
um, things like that are like obviously really important for the ecosystem, and all these things exist in Ethereum. So, um, I think we're still optimistic about it, and like, I don't think I'm the right person to be kind of like making potential kind of like statements and judgments on whether or not it's going to be around or like what's going to take over. I'm not really sure on that front. But I think we're focused on kind of building on Ethereum because we think it's the best place to do it. And I absolutely would love to see that future where, um, you know, a lot of different things are tokenized, like a lot of different assets are tokenized. I think it's absolutely possible. Um, I think there's a lot of smart people working on a lot of like scaling solutions. Um, and there's a lot of cool projects that are building on Ethereum. If you just look at, I think you just mentioned kind of like the different key pillars of finance that are being replicated in a decentralized way.
mm,
That's no mean feat. So there's a lot of projects that are investing a lot of time and a lot of really smart people doing it. So we would obviously love to see that, and we we definitely are very optimistic about it. And I think the key thing here is like you just got to be taking a long term view. And none of the stuff is going to be solved in like 6 months or a year. I think it's going to take a lot longer than that. But like
yeah,
I think in 6 months, like we've been working on this margin trading protocol. So like this is just 6 months. So like we obviously see a much longer roadmap for us, and I'm really excited by that.
yeah. No, that's so exciting to hear. Obviously, one of the major bottlenecks of Ethereum currently is scalability. And I'm always wary about talking too much about throughput. I sometimes call it the throughput fallacy. Everyone talks about throughput, but that's not the most important thing. Decentralization, I think, is the most important thing in this industry. But it seems like you kind of got around that scalability issue with Ethereum in terms of doing off-chain, having an off-chain order book, and doing on-chain settlements. Is that correct? And I would be interested to understand those mechanics a bit more.
Yeah, so we're currently integrated with like the 0x, I guess, protocol. So we leverage like a lot of decentralized orders through their kind of like off-chain order book, like on-chain settlement model. So yeah, I think like throughput generally is going to be an issue, kind of like longer term. But that's kind of, I feel it's like a good problem, right? It means like a lot of people are using this stuff, which
yeah, right.
is actually a really good problem. And like if that became our bottleneck, then like that's a great outcome for dYdX. Today we're more concerned kind of around just like how can we create the best kind of like user facing application that that makes it really easy for people to use, right? That makes people want to use decentralized applications. That makes people want to trade in a decentralized way. I think like the UI has to be, as good, if not better than like what's already out there in a centralized exchange. So that for us is kind of like the immediate, thing that we're tackling. And I think it's the most important thing to tackle right now. I think if throughput, becomes the bottleneck, that's like a really good problem. But from a technical point of view, yeah, like I think we're leveraging kind of like, the same model as kind of the 0x kind of like decentralized exchange ecosystem. And every position that's created on the dYdX protocol is leveraging like spot market transactions or positions on decentralized exchanges. So like if you want to say, for example, like short Ethereum, what's actually happening is that like you're sourcing like lending liquidity from someone and then atomically like selling that on a decentralized exchange for like whatever currency you're locking up as collateral. So say like, for example, like if you're using DAI as the collateral currency, the quote currency, then you're selling ETH for DAI, and then DAI sitting in the protocol, like the dYdX protocol as collateral. And that's all leveraging kind of like this, off-chain order book, on-chain settlement model.
That's very cool. And 0x is obviously the leader in the DEX space. So it's awesome that you guys have partnered with them. Interested in understanding how you'll integrate with them. Is it going to be? Are you going to would you ever create a relayer, or are you just going to sell your kind of short Ethereum tokens on, say, an existing relay like Radar Relay?
Yeah. So good question. So I think there's kind of two ways you can get short and leverage tokens. One is through Expo, which is this product that we've just launched. What it does is enables someone to use like their own like ETH holdings from their own like wallet, their own kind of like MetaMask wallet, and purchase or in the technical terms mint a short Ethereum token. So functionally, what's happening there is like there's a position on the dYdX protocol, and you're minting tokens from that position. So that's like the one way you can do it. The other way is, which is not online yet, but it will be online in a couple of weeks, is the ability to purchase short Ethereum tokens on exchanges like Radar Relay. So Radar is going to be the first kind of like DEX partner on this front. And you'll see pretty shortly like an order book, similar to like, say, if you were trading, ETH to DAI, or like, 0x to ETH, right? Just as if it's a regular order book. And you could buy and sell short Ethereum tokens on Radar Relay. So we're going to be working with a whole bunch of different exchanges pretty soon. So we're pretty excited to get and to see like these short and leverage tokens out in the world on different exchanges.
Yeah, that makes sense. I mean, it's kind of like Maker in a sense that you need to go to their dashboard and mint DAI by collateralizing Ethereum, and then from there the DAI exists in the world, and you can buy DAI on exchanges, often with on 0x. Actually, that's the major stable pair.
Right.
So yeah, I get how it works. It's so cool because I'm sure like I haven't actually done much short trading in the real world, in the real finance world, or the traditional finance world. But I assume the liquidity would not be anything like this, right? Like you can't just sell a token representing a short position. Is that what people are going to be doing?
Yeah, I mean, it's incredibly simple, right? So like if you traditionally want to short, like you're gonna have to like go to your like broker and like try and borrow the asset, figure out what the right interest rate is, then like sell it right on whatever exchange you're using.
Yeah.
And then you have to like watch the price in case of like a margin call, and then like you have to buy it back and then like repay the lender. It's just like mechanically like kind of pretty difficult. And it's kind of like the analogy I like to give is kind of like it's akin to, in terms of simplicity, as like buying like an ETF, right? It's like instead of getting, if you want exposure to like tech stocks, you don't have to like go buy like each individual tech stock. You can just buy the index, right? And you get that exposure. From a simplicity point of view, this is like, I think pretty similar in that like you don't have to go through those mechanics. You can just buy like one ERC20 token, which functionally is like every other ERC20 in that you can just like buy and sell it, and like interacts and is kind of like already the same standard as every other token. So it like works on exchanges, it works with wallets, and then you immediately have the same exposure as if you had gone through all those mechanics. So like as like the price of Ethereum goes like down by $1, like the price of short Ethereum will go up by $1. So it's like exactly in the
this frictionless, high liquidity trading environment where people realize gains and then sell those gains immediately. So there's never going to be a maturity period. Is that right?
There is an expiration for these tokens.
Okay.
So from day one, that expiration will be 28 days.
All right.
So people can basically like mint them, hold them, and trade them for that period of time. But they will close at the end of that period. But like the way we've got it working is that like there will be multiple of these, such that like there'll never be a time when there's like not a short token available. So if you want exposure, like it'll always be there. So
yeah, I mean, I want to because I love just playing around with new things. Like in the DEX landscape. So could you just explain how to do it. So I know a lot of people who watch this are going to be crypto nerds, and they'll want to literally go into Expo, mint a short token or leverage long token, and use it. So yeah, maybe could you just go through a step-by-step process of how to use your product?
Yeah, literally, yeah, for sure. So it'll be at expotrading.com. So you'll go there first.
I'll put that in the description. expotrading.com.
Yep.
Yeah.
And then it's just like a landing page. So there'll be a button there that says like trade with Expo. So you can click that, and then that'll bring you to basically like the main kind of like trading page, where you'll see like short Ethereum. So the position that's available today is like called short Ethereum 1030, and 1030 is October 30, which is the expiration date. And you'll see basically like a chart that has like the value of short Ethereum since the position was created, which was October the 2nd, yesterday on my time. And you basically just need to connect your wallet. So for example, if you have like a MetaMask account, like connect that, and you hit buy, and it'll bring up a little page with a little like order page basically, and you can just select how much ETH you want to invest, and it automatically converts it to short Ethereum, and then you hit buy, and it works like any kind of like decentralized kind of like trading in that you got to like put up gas to confirm the transaction, but once that's done, then you're done.
Presumably you need to wrap the Ethereum, right?
No, we actually wrote a contract on the protocol that does it automatically. So as a user, you don't need to actually worry about that.
Oh, that's awesome.
Yeah.
Because it's only ERC20s, right?
Yep.
That's cool. Tell Maker to do that. That's super cool. The only thing I would say is, why didn't you do this at the start of the year? I would have loved to buy a short ETH.
Yeah, a lot of people have actually said that to us. Yeah, it turns out these things are harder to build than you think. I don't know. What I like to say is like, who knows what's going to happen to the price, right? And like a lot of people are exposed ETH and like other ERC20s. Like if you're long-term bullish. So even then, it's like even getting it now is like a good hedge, right? And like an interesting kind of case that we've talked to various people about is like, creating kind of like a bundle of like say ETH or like ERC20s, and then adding some short ETH in it to kind of like hedge it, right? And that's totally possible with projects like Basket, like BSKT, and like Set Protocol, like those kind of like index fund type projects. So I think that's a really interesting use case that people can definitely like use short Ethereum for, or you can use it as a speculation tool, right? If you just believe it's going to go further down.
Yeah. But I mean, I think the main deal is that we discussed that it's a 1.2 billion, quadrillion dollar derivative market that thus far hasn't touched crypto really.
Yeah.
Like the current toolbox for crypto investors who want strategies to hedge portfolio risk seriously unsophisticated and full of friction. So the fact that, and this is like paradoxical given that these inefficiencies are supposed to be solved through smart contracts.
Right.
So, I mean, I think what will happen, and I mean, I'd be interested in your comments on this, but something that makes me excited about dYdX is that it could actually really help price discovery of these assets.
Yeah, I think that's true. I think, derivatives and margin trading typically do help with that empirically. I think, the interesting thing is to take margin positions on different assets, you obviously need someone on the long side too. So while people want to short a whole bunch of different scammy tokens, you've got to find the people who are actually willing to lend that out. So it's interesting. That's something that I think will come over time. But I think liquidity is the biggest factor there. So we'll be definitely putting out more assets around like other ERC20s outside of Ethereum. But I think generally like products like this, and I'm not saying like dYdX is exclusively going to be the one, but like us and like other projects in this space, releasing things like this will help kind of like bring in more liquidity, right? Like it opens up kind of like more products and more use cases such that people will feel more comfortable using decentralized exchange. Whereas today, kind of the broad product suite and like capabilities of decentralized exchange is still obviously less than centralized exchange, but it's changing every day, like with all the launches that are happening. So we're really excited that like we're hopefully contributing to bringing in more liquidity to dexes, and all of that's going to help with price discovery, like efficiency in the markets, all that stuff. But it's still super early days, right? Like volumes in dexes is still nowhere near centralized exchanges, but I think that's changing over time, and like it's come an incredibly long way in like 12 or so months.
Yeah, I mean, I always think that centralized exchanges need to be worried because architecturally technology's there to make them irrelevant.
Totally. And it makes so much sense, right? It's like, why would you not want to trade peer-to-peer?
I mean, yeah, you could argue that that's the key innovation of crypto, trading value peer-to-peer. So,
totally.
like, I think there's been way too much emphasis on centralized exchanges, given and I think they've got a place currently, but I mean, it's just a matter of time, I think. So really interested to hear also just the roadmap, like what's going ahead. What's the next like couple of years look like for dYdX?
Yeah, I think like we obviously built kind of two things with this initial launch. One is like the protocol itself, which actually anyone can interact with, and it's like obviously open source. And then we've also built this like front end facing product on top of it. So I think we're a little unique in that sense versus like other protocol companies that like maybe focus on the protocol and then like build a bunch of like developer tools and kind of like a community of kind of like contributors. I think like for us, we think it's really important to kind of like build like the first use case, or like at least kind of like demonstrate like how things can actually work on the protocol. And like Expo is just one thing, right? It's like, it doesn't even show like the really diverse sets of functionality that the protocol can support. So I think I'm really excited to see on the protocol side, like if and when like other people start to come up with like different things. I think there's like pretty interesting things that people can work with. I think on the Expo side, like we obviously want to build out more features for margin trading. So part of that is, I think, it's if you look at the product, it's like I think it looks great, but it's like very much an MVP. So we want to definitely continue to build that out. I think we want to add more assets. So not just like short Ethereum, we want to have like leveraged Ethereum and like short and leveraged other ERC20s. I think we want to get these tokens on exchanges. So Radar Relay, we're really excited for them to kind of like launch it on that platform. But other dexes as well, I think will be really exciting. And then I think we want to do other like actual derivatives, right? Like margin trading technically is not actually derivatives. It gets you kind of like similar types of exposure, but it's not technically a derivative. So we want to, I think, we talk about in the white paper, kind of like our version of kind of like options is kind of like a covered option. So enable people to take call and puts on ERC20s, which I think will be really powerful as well. So that'll be kind of the roadmap next year. But I think for the time being, I think we want to focus on this margin product, which is, obviously like the actual trading side, and then potentially the lending side as well. Obviously, there's a lot of appetite for people to kind of like lend assets that they're long-term bullish on.
Yeah, for sure. Another interesting attribute of dYdX, and correct me if I'm wrong, but you don't have a token.
Nope.
And I think like from Apollo's perspective, we actually wrote a piece that said your ICO doesn't need a token.
Cool.
And, and the thing that we hate is when people graft a token on for fundraising purposes. A lot of the reverse ICOs that companies create are exactly that. They just want to raise easy money without giving away equity. So, I mean, we were really happy to hear that. I'm just really interested, like, let's talk about the roadmap, like super long way ahead, right? Do you envisage dYdX being a totally decentralized protocol? And if so, do you expect like some sort of governance mechanism in the form of a token might be necessary? Or how are you thinking about tokens? Is it never going to be needed? Will it be needed?
Yeah, good question. So I think like our general stance on it is like you should think about it a lot before you do one, which is actually probably the reason we haven't done one, because there's no clear use case for like a token like in a margin trading protocol or like an options protocol. So it's not to say that like it's definitely the case that we wouldn't do one in the future. I think it's like it's definitely like it's an option, right? I think there's like we're spending a lot of time kind of like in the research phase thinking through like what are other versions of protocols that we might need down the line, and if they happen to actually have a genuine need for a token, then that in that scenario we would do one. But like the big caveat there is that like it's definitely in the research stages, and we wouldn't do one unless it's like actually necessary. And I think like we'll as an industry learn a lot more, right? As like protocols are taking a bunch of different approaches today in terms of like how to like monetize, and I think that will be an interesting kind of like development that happens in the industry. So yeah, we're not in any rush to kind of do one, but like at the same time, like we're not gonna rule it out either. One of the reasons we took kind of like more traditional like venture capital financing rounds was exactly for this reason. It's because I think we're pretty long term focused, which is I think pretty aligned with the investors. And yeah, we don't feel any rush to like rush into some kind of like token that doesn't make sense. We'll think about it pretty seriously, but like the goal right now is just to make sure we create a lot of value. Both like building good products and like getting people to use them, and then we can worry kind of about capturing value down the line. There's definitely a few options that we have there. So yeah, I don't know if that answers your question.
Literally the opposite of most ICOs, which is fantastic. You actually want to build something that people use that has value, and then work out the token side. So it's awesome to hear. But yeah, I kind of two questions. One, how do you envisage making money? To put it bluntly. And two, how will the protocol be governed going forward? I mean, the only token that I could see that would have any real use is a governance style token. So understanding the kinds of creating it like that in a more decentralized manner.
Yep.
Yeah, I mean, what's your view on that? I mean, will dYdX always have a centralized kind of management team, or do you think you'll have to go to a tokenized governance model?
Yeah, I think governance is an interesting question. Like, there's I think broadly two ways you could kind of do a token, right? Like one is like, or that we've seen anyway. One is like a kind of like token for transaction fees, which like maybe that emerges as like the standard way that like protocols make money in the future. If that's the case, then like that could be something that we do. It's probably not like something that we're thinking about too much right now, but like part of this is like, yeah, we're not sure how the industry is going to emerge, like what standards will emerge, right? So that could be the standard. The second way is like, as you said, like a governance related thing. I think that's something that we definitely want to do more research on. So we have kind of like thought a little bit about like how something like that would work. But it's it's definitely in its early infancy in terms of development. And then I think the other way is, I guess, like, which is more traditional, kind of just like if we're also building the like application or exchange layer, that's like another way that you could potentially build a business model around dYdX. It's kind of like you build the protocol, but you also build like the application layer, and the application layer is like like semi-centralized, right? So that's like the other way that this could happen. I think like yeah, as I said, kind of like we're more focused right now on just like making sure we create the value, and then sort of like building the business model around it will come over time. And I think part of that is like us doing more research internally, and also secondly, like, you know, watching as the industry standards sort of emerge around these things.
Yeah, well, I mean, one of our investments is dCred, and people always talk about dCred in terms of governance, an on-chain governance model. And I mean, the guys at Placeholder said in their investment thesis, with good governance in relation to dCred, with good governance, you can do anything. And they were referring to dCred's governance model. But I think it's too soon to tell in this industry whether on-chain governance is actually good governance. I mean, we've seen with Bitcoin that, you know, their governance model is actually pretty good. It works kind of well so far. So I think it's really commendable that you guys aren't like arrogantly rushing into a certain governance model or token model.
Yeah, and I think like the way we're thinking about like the protocol, right? In that, like, it's obviously like built by us, but you know, the way we built it is like, I think, pretty unique as well, in that like we built it like in an extremely like generalized manner. And like I think we kind of like, the way we think about it is that we split it up into like a base layer protocol, which is like super general, and then there's like another layer of like contracts that sit around it, and then we call that kind of like the second layer. And then any future like upgrades and things, the way we're going to handle like upgradability is that like all of these new contracts that get built either by us or like by anyone in the community are going to be like opt-in, right? So if you want to use dYdX protocol, there's obviously the base layer, and then any like further functionality that gets built by us or someone else like is on the second layer, which is totally opt-in. So I think that's like a pretty interesting way to like think about like upgradability. And it basically means that we don't have, like, we're not the ones like forcing people to use certain contracts. There's this base layer that's like the original protocol, and there's like the second layer that, like, you know, basically you can opt into or not opt into. Rather than forcing kind of like all of the contracts for people like to use, you know, in a kind of like definitive way.
Yeah. I just have like one more main question. Over in Singapore, during like it seems like every year in crypto there's a new theme, right? So last year was ICOs. Maybe earlier this year it was kind of interoperability, and now we're moving into the bearish security token stablecoin world. Interested in your perspective on how security tokens might fit in, and whether you're thinking about creating a security a short and putting it on open finance or something like that.
Yeah, I think it's definitely really interesting. It's like not something that we've spent a lot of time focusing on or thinking about. But I think like, I definitely think the hot topic of this year has been stablecoins. There seems to be a new stablecoin like every month or so. So kind of like, who knows what's going to happen on that front. I mean, I definitely think it's important for the ecosystem. We're obviously working with like the DAI stablecoin. So like when you're trading like short Ethereum, like you're trading it against DAI. So I do think it's super important, and it's like, you know, derivatives is like, and margin trading is like a super clear use case for like why it's important to have a stablecoin, so that your collateral is not like moving around like as it's locked away. So yeah, I think that's like really interesting. Yeah, in terms of the security token front, like, yeah, we haven't spent a lot of time kind of thinking about it too much, but you know, I think like if certain like security tokens end up, you know, proliferating, I think that's a super interesting like development, and like it really, you know, building derivatives on top of that is certainly like something that we would love to do in the future.
Yeah, I mean, my brain's whirring, but a little bit like, you know, there is a world where you could have, you know, if there's a stable coin that is accepted, kind of a protocol like dYdX for derivatives, you could really have like application layers in each jurisdiction that are compliant. So like you could have in New York, you could have, you know, you could have like the stable coin for USD, and you could have, and if security tokens are a thing, you could have all securities in that jurisdiction traded on the kind of dYdX style protocol. Like is that kind of the best case scenario for dYdX, just like shifting the entire financial system over?
Yeah, I mean, I think that's like the absolute best case scenario for anyone in building in the finance space, right?
Yeah,
I think that would be incredible. There's obviously a long way to go, but I think that that's where you start getting into like replicating the insane market sizes of derivatives in traditional finance. So I think in the best case scenario that would be amazing. It's obviously like really exciting and like brings a lot of liquidity to a lot of different assets, and all the things we've already talked about in terms of why decentralized exchange is really important and very interesting. It's would happen for a lot of these asset classes, which would be honestly really cool. But I think initially, the way to start is kind of like close to home, right? You build the things that crypto assets that are actually being traded today, and then go from there. But yeah, that's an exciting future, and I think that's one of the reasons why I joined dYdX, because I think you kind of like look far out and like look at the actual kind of like end bull case, and it's like thinking about that market size is like my head explodes, right?
Yeah.
So yeah, that's obviously really exciting. But I think
you got to keep your feet on the ground and actually do what's possible. And that's what you guys have done. Like, you're building stuff. Josh, and thanks for like taking the time to talk to us. It's expotrading.com is the new launch application of dYdX, and you can short Ethereum if you're bearish still on Ethereum. Maybe I might even just spruik it for a hedging bet for people who own DAI. So if you've collateralized some ETH in your to create a CDP, maybe it's a good option to have some hedging with dYdX. Yeah. So thanks again, man, and it's great to see an Aussie over in SF killing it.
Yeah, thanks, James. I appreciate it. Yeah, so definitely, check out our website, give it a go, give it a spin. At the very least, you'll have a good time buying some short ETH. You'll be one of the first people to hold it, which is pretty cool. But yeah,
sure.
No, definitely check it out. And we're hoping to kind of put out more awesome products. This is hopefully just the beginning for us. And I think it's important for us to kind of like iterate like as quickly as we can. And so yeah, we're excited to get it out there, and appreciate kind of the support. So it was fun doing this interview.
Cool. Thanks, Josh, and appreciate it. Good luck with everything.
Cheers. Thanks.